Today is the 25th of February 2023. We'll do our disclaimer, go over our calls, make some predictions, and because it's the weekend, we'll take a look at the longer term picture. Well, this is my trading plan for Monday, which is February 27th, 2023. Please remember, I can be completely wrong, and any trade you make should be at your own risk. We're looking for a pattern on Friday with the early low, which is what this is. And on Monday, when the market reopens, we should also have the pattern with the early low. We had some price targets in the 39.70s. I thought they might not print because I think we're very close to a low here, but they did print, so that worked. This is a reminder of what we said, and these are the patterns I'm looking for to occur next week. I think it's important to know this, that I think we're very close to a low here, and it wouldn't take much to send us much higher. Well, this low came right at this green line. This green line is an FOMC announcement price from months and months ago, and it's kind of magical how prices remember that number. But that's not where the magic ends. We also had support at this line. We had resistance right at the MEJT targets. That's some more magic, but we're not done. During the day, MEJT gave a buy signal, and that certainly has worked. Here's the daily chart. I'm not really a big fan of candlesticks. I did look at it at candlesticks years ago. I wasn't impressed with the results unless it involved a Bollinger Band. Now this is a hammer. It's a bullish candlestick, and it involves a lower Bollinger. Now this needs confirmation, just like any signal. It has to trade past the close. But if it gets confirmed, and you have a reversal formation involving the lower Bollinger Band, the target is a challenge of the upper band. And of course, if you undercut that low, the pattern's killed. Trying to get rid of this without much luck. Okay, now this is the 200-day moving average. Tends to provide a support level, so we stopped right at support. Well, here's some more magic for you. We stopped right at the 200-day moving average, which is support. If you look at the magenta trend line of this last wave down, you take 61.8%. We stopped right there. And if you take this whole decline and you divide it into thirds, which is what Gann liked to do, and you take 1/3, we also stopped right there. And that's additional support right at this price. Now this is the count I've been using. It's not the only count, but it's a valid count, and it's not the only way to count things. There's so much support here, I would like that to hold, but if this is wave black C, it doesn't really have a great relationship to this black A. It doesn't have to, but I would like it. But let's not forget, it's not the only valid count. Let's look at a different one. Before we do, let's see if we can count this wave down here as complete. Well, I'm going to say yes. I can count it as a 5-wave pattern, although this wave still concerns me. But I can also count it as a three-wave pattern. It doesn't break any rules. So as far as that leg down, you can count it as complete. Now here's an alternative count. We kept A the same, gray A, and we had a B the same. But instead of ending a wave count here, I ended it here for magenta A. And if that's magenta A, you can pick an ABC with A and C being equal for B. And then this drop here would be magenta C, which would have a FEB relationship with magenta A. Now that doesn't mean magenta C is over. It could be just A, black A of C, and we could consolidate because of the length of time spent in this decline. Compare with the length of time spent in this decline, it wouldn't surprise me if that's just A of C. But that's not the real magic. The real magic is if that's gray A and that's gray B and gray C ended there, it's exactly equal to gray A. So you have an ABC with C equal to A at that price, but there's more magic to come. This is my long-term count, and I've just changed the degree of these waves here from magenta to blue, which is a larger degree, and that's a valid reason for this decline ending here, although to make it work I had to make A end with an expanded flat. But let's focus in on this wave A here. This is wave A without an expanded flat, and it starts in late March of 2000 and goes all the way to 2009, the market low. And that's the height of the ABC. And the real magic is, if you bring it up to here, you get green C is equal to green A right at this low within 10 points. So that's within 10 points over a 23-year period. If that's not magic, I don't know what is. So if this holds, you've completed an ABC with perfect fibs on multiple time frames over a 23-year period. Well, Monday's pattern has yearly low doesn't mean you won't gap up. Typically it's a rally day with a high in the final hour, but if it's weak, more weakness tends to follow in subsequent days. There is strong support at Friday's low from the 200-day moving average, a prior FOMC announcement price, Gann and Fibonacci price retracements, a candlestick pattern, and time and price targets of other people. I've got a friend who has a way of picking price targets, which gives a lot of targets that don't work, but if it works, I pay attention, and one of his numbers hit right at Friday's low, and there is some things based on the FRO saying we're going to have a turn here. There's also wave balance on multiple time frames compatible with a 23-year ABC pattern having completed. So if that low holds, we should go much higher before long. However, a rally need not start immediately, as we still could be in the consolidation. We just need the low not to be undercut significantly. For the short term, we've had 3 straight days of sharp declines which couldn't hold at the close, the following day's open can substitute for the close. That is a bullish pattern. It implies retail customers are selling, but the professionals are not following suit. That doesn't mean we have to open higher Monday, but if we open lower, I think we're going to recover. We have all these drops, but they won't stick. We can't even, after gapping under all these lows, we still overlap the prior low here. These lows just are not holding. So we have the pattern with the early low. Doesn't mean you won't gap up. I can't predict how we'll open Monday, but if we open, but I think if this low holds, and there's a very, very good chance that low is going to hold, and it's going to be a major low. And even if we consolidate rather than rally, I think the longer this low holds, the greater the chances that a very strong rally is going to come, and probably not before too much longer. And that's today's call.